The United States government owes $37 trillion. That is more debt than any nation in human history. It's more than the entire global economy produced in a single year just 2 decades ago. And here is what nobody is telling you. They are not planning to pay it back. They are planning to erase it. Not through default, not through austerity, and not through higher taxes. They will do it through devaluation, a strategic, calculated, invisible theft of purchasing power from everyone holding dollars. The mechanism they are using is something most people think is separate from government: crypto and gold. You are watching the U.S. government execute the most sophisticated debt elimination strategy ever attempted. They are building a parallel financial system, accumulating strategic reserves in Bitcoin and gold, preparing to revalue those assets at multiples of their current prices. They will then use that revaluation to technically balance a debt that is mathematically unpayable. But here is the part that should terrify you. When they revalue gold and crypto upward, they are simultaneously devaluing the dollar downward. Every dollar you hold loses purchasing power. Every bond you own becomes worthless in real terms. Every savings account evaporates. You are about to be robbed, legally, quietly, and completely. Most people will not even realize it happened until it is too late. In this video, I will show you exactly how this works. This is not theory or speculation. These are the actual mechanics of debt devaluation through strategic reserve revaluation. I will show you the historical precedent, because this has happened before, multiple times. I will show you what the U.S. government is doing right now: the executive orders, the Bitcoin reserves, the gold accumulation. Finally, I will show you the timeline for when this will happen, how fast it will occur, and what you must do before it is too late. This is not coming in 20 years. It is happening right now. The pieces are moving into place, and once it executes, there is no going back. Let me start with a fundamental concept most people do not understand. Government debt is not like household debt. When you owe money, you have to pay it back with real value, by working more hours, selling assets, or cutting spending. But governments have a tool you do not have. They control the currency. Controlling the currency means they can change the rules. They can redefine what a dollar is worth. They can revalue the assets on their balance sheet. They can make debt disappear without ever paying it. This is called a monetary reset, and it has happened repeatedly throughout history. Let me show you the pattern. In 1933, the United States was drowning in debt from World War I and the Great Depression. The debt-to-GDP ratio was 40% and climbing. The economy was collapsing, and deflation was destroying everything. So President Franklin Roosevelt did something radical. He revalued gold, not by a little, but by 69% overnight. Here is how it worked. In 1933, gold was officially priced at $20.67 per ounce, a price that had held since 1879. For 54 years, 1 ounce of gold equaled 20. The dollar was literally defined as 1/20th of an ounce of gold. This was the gold standard. But the government was broke and could not pay its debts at the current gold price. So Roosevelt issued Executive Order 6102, making it illegal for Americans to own gold. Citizens had to turn in their gold to the government in exchange for $20.07 per ounce. Most Americans complied. Then, after the gold was collected, Roosevelt revalued it. In 1934, he announced the new official gold price, $35 per ounce, a 69% increase overnight. Here is what that did. The U.S. government, which now held most of the nation's gold, saw its gold reserves, worth about $4 billion at the old price, suddenly valued at $6.8 billion. They created $2.8 billion in value out of thin air just by changing the price. But here is the key. The debt they owed was denominated in dollars, and those dollars were now worth less relative to gold. Before the revaluation, the government debt was 40% of GDP. After the revaluation and the inflation it caused, the real debt burden fell to 25% of GDP within 5 years. They erased 15 percentage points of debt to GDP just by revaluing gold and devaluing the dollar. American citizens who held dollars lost 40% of their purchasing power over the following decade. The government transferred wealth from dollar holders to eliminate its own debt. This is the playbook, and it is happening again right now. Let me show you how. The United States currently owes $37 trillion in debt. The debt-to-GDP ratio is 132%, higher than at any time in American history except for World War II. The annual interest payment on that debt is $1.2 trillion. That is more than the defense budget, more than Medicare, and more than anything except Social Security. If interest rates stay at 5%, these payments will hit $1.8 trillion annually by 2027. That is 6% of GDP just in interest. This is unsustainable. Everyone knows it. The Congressional Budget Office, the Treasury, and the Federal Reserve have all run the numbers. There is no scenario where this debt gets paid back through traditional means. You cannot tax your way out of a 132% debt-to-GDP ratio. You cannot grow your way out when the debt is growing faster than the economy. You cannot cut spending enough when interest alone consumes 6% of GDP. There is only one option: devaluation. But here is the problem. If they simply print money to pay the debt, everyone sees it. Inflation spikes, the dollar crashes, and confidence collapses. They need a more sophisticated method, something that looks legitimate, like smart policy, and does not look like theft. This is where Bitcoin and gold come in. Let me show you what is happening right now. On January 23, 2025, an executive order was signed establishing a strategic Bitcoin reserve. The order directs the Treasury to acquire and hold Bitcoin as a strategic asset, similar to the Strategic Petroleum Reserve, but for digital currency. The stated goal is to position America as a leader in digital assets and ensure the U.S. does not fall behind China or other nations in crypto adoption. That is the public narrative. Here is the real reason. The U.S. government currently holds approximately 210,000 Bitcoin, seized from criminal enterprises like Silk Road and Bitfinex. At a current price of around $100,000 per Bitcoin, that is $21 billion. That is not nothing, but it is not enough to matter for a $37 trillion debt problem. However, the executive order does not just direct them to hold existing Bitcoin, it directs them to acquire more. The proposed target in a bill introduced by Senator Cynthia Lummis is 1 million Bitcoin over 5 years. At current prices, that would cost $100 billion. But here is what they are actually doing. They are not buying Bitcoin at market prices, as that would spike the price and cost too much. They are acquiring it through other means, seizing it from criminal investigations, accepting it as payment for fines from crypto companies, and potentially even mining it using government-owned energy infrastructure. They are doing this quietly because the goal is not to acquire Bitcoin at current prices. The goal is to acquire Bitcoin before they revalue it. Let me show you how the revaluation works. Imagine the U.S. acquires 1 million Bitcoin over the next 3 years at an average cost of $120,000 per coin. That is a total acquisition cost of $120 billion. They do this quietly, without announcing the totals. By 2028, they hold 1 million Bitcoin. Then they make the announcement. The U.S. Strategic Bitcoin Reserve is operational, and for balance sheet purposes, Bitcoin will be valued at $1 million per coin, a 10x revaluation overnight. What does this do? Their 1 million Bitcoin, acquired for $120 billion, is now worth $1 trillion on the government balance sheet. They have created $880 billion in value out of thin air just by changing the accounting price. But it is not just accounting. Once the U.S. government, the largest holder, declares Bitcoin is worth $1 million and backs that with its full faith and credit, the market follows. Bitcoin may not hit $1 million overnight, but it could surge to $300,000, then $500,000, then $800,000 over the next year, close enough for the government's balance sheet math to work. And here is the key. While Bitcoin is rocketing to $1 million, what is happening to the dollar? It is collapsing. The revaluation of Bitcoin upward is the devaluation of the dollar downward. They are the same event, viewed from different perspectives. Now, let me show you the gold side, because Bitcoin alone is not enough. The U.S. needs a two-pronged strategy: Bitcoin for the future and gold for the past. The U.S. government officially holds 8,133 tons of gold, which is about 61 million ounces. At a current price of around $2,800 per ounce, that is worth $731 billion. But here is the catch: that gold is valued on the government's books at $42 per ounce, a statutory price set in 1973. On the books, the U.S. gold reserve is worth $11 billion, not $731 billion. Why? Because it gives them room to revalue. The U.S. could announce a new gold revaluation, declaring that for strategic reserve and debt-backing purposes, gold will be valued at $20,000 per ounce. At that price, the U.S. gold reserves would be worth $5.2 trillion. They have just created $5.2 trillion in balance sheet value out of thin air by revaluing an asset they already own. Now, combine this with Bitcoin. 1 million Bitcoin at $1 million each equals $1 trillion. 261 million ounces of gold at $20,000 per ounce equals $5.2 trillion. The total new balance sheet value from revaluation is $6.2 trillion. This is $6.2 trillion in assets that can technically offset debt, making the debt-to-GDP ratio look better and the government appear solvent. But here is the real magic. Once gold is officially revalued to $20,000 per ounce, the market price will follow. If the largest gold holder in the world says gold is worth $20,000 and backs that with policy, the market will reprice. Gold may not hit $20,000 overnight, but it could rise to $5,000, then $8,000, then $12,000 over the next few years. And as gold and Bitcoin soar, the dollar is being destroyed. If gold goes from $2,800 to $20,000, the dollar loses 85% of its value relative to gold. If Bitcoin goes from $100,000 to $1 million, the dollar loses 90% of its value relative to Bitcoin. The average American does not think in terms of gold or Bitcoin. They think in terms of groceries and rent. But those prices are about to explode. When the dollar loses 85 to 90% of its value relative to hard assets, it loses 70% of its value relative to everything else: food, energy, housing, everything. Let me show you what this looks like in real terms. Imagine you have $100,000 in savings today. You think you are stable. The government revalues gold to $20,000 and Bitcoin to $1 million. Over the next 3 years, real inflation hits 20% annually. Food prices double, gas prices double, and rent increases 60%. Your $100,000 in savings now buys what $35,000 bought 3 years ago. You have lost 65% your purchasing power. But the government's debt? It is still $37 trillion nominally, but in real terms, adjusted for the inflation they caused, it is worth $13 trillion. They have erased $24 trillion in debt burden, not by paying it, but by devaluing the currency it is denominated in. They have stolen $24 trillion from creditors, savers, and dollar holders. This strategy is already in motion. In December 2024, Senator Cynthia Lummis introduced the Bitcoin Act, proposing the U.S. acquire 1 million Bitcoin over 5 years and hold it as a strategic reserve asset. The bill has bipartisan support because both parties know the debt is unpayable. In January 2025, the executive order establishing the Strategic Bitcoin Reserve was signed. This is the execution. On the gold side, there has been increasing talk about returning to a gold-backed currency. This sounds conservative, like sound money, but it is the setup for revaluation. You cannot back the dollar with gold at 2,800s per ounce. There is not enough gold. The M2 money supply is $21 trillion. And the U.S. holds $731 billion in gold at current prices, only 3.5% backing. But if you revalue gold to $20,000 per ounce, suddenly you have $5.2 trillion in gold, 25% backing of M2. Now, you can credibly market it as a return to sound money, but what you have really done is revalue gold 7x and destroyed the dollar's purchasing power by 85%. It is theft marketed as fiscal responsibility. There is also an international dimension. The BRICS nations have been talking about a gold-backed currency for years and have been accumulating thousands of tons of gold. When the U.S. revalues gold, it triggers a global repricing. Every government has the same problem, unpayable debt, and the same solution: devaluation through hard asset revaluation. The U.S. is positioning this to happen between 2026 and 2027. Here is the timeline. 2025, accumulation phase. The U.S. quietly acquires Bitcoin through seizures and strategic purchases. The gold narrative builds. 2026, crisis phase. The debt ceiling fight becomes severe. The bond market shows stress, and a crisis creates the justification for extraordinary measures. 2020, valuation phase. The government announces the Strategic Bitcoin Reserve is operational, valuing Bitcoin at $1 million per coin. Simultaneously, they announce a return to gold backing, revaluing gold to $20,000 per ounce. The dollar collapses and inflation explodes. 2028 to 2030. Stabilization phase. New prices stabilize. Those who held hard assets preserve wealth. Those who held dollars are destroyed. The winners are obvious: the U.S. government, politicians, early Bitcoin and gold holders, foreign governments with gold reserves, and the wealthy with hard assets. The losers are the middle class, retirees on fixed incomes, bondholders, pension funds, wage earners, renters, and small businesses. This has happened before in Weimar Germany, Argentina, Zimbabwe, and Venezuela. The pattern is universal. The U.S. is following the exact same script. just with more sophisticated branding. So, what do you need to do? You need to act now. Get out of dollar-denominated assets. Bonds are death. Cash is death. Minimize cash holdings to what you need for 3 months of expenses. Get into hard assets. Gold. Physical gold that you hold. Coins or bars stored securely. Bitcoin. If you understand it and can hold it securely. Real estate. Productive property like farmland or rental units in strong markets. Commodities. Energy. Agriculture and industrial metals. Get out of debt. Pay off high-interest debt. Be cautious with mortgages. A low fixed rate can be kept, but adjustable rates are dangerous. Diversify internationally. Open foreign bank accounts. Consider foreign real estate and stocks. Do not keep all your wealth in US dollar assets. Build skills and relationships. When currency fails, what matters is what you can do, what you can produce, and who you know. This is not a doomsday conspiracy, it is policy. The US debt to GDP is 132%, a fact. The interest payments are $1.2 trillion, a fact. Devaluation is the only mathematical option, a historical precedent. Central banks worldwide are buying gold at record rates because they see what is coming. The reset is intentional. It is deliberate policy to eliminate debt by destroying the currency. They are choosing this because the alternative, default, would destroy the government's credibility permanently. Devaluation destroys the people's wealth, but preserves the government's power. They will choose it every time. Your choice is simple. Adapt or get destroyed. You can be morally outraged and financially ruined, or you can be morally aware and financially positioned. I would rather you survive and fight another day. Here is your action plan. Week 1. Open a precious metals account. Buy physical gold. Week 2. Open a Bitcoin account. Buy Bitcoin. Week 3. Evaluate your bonds. Sell long-term government and corporate bonds. Week 4. Reduce cash holdings to 3 months' expenses. Month 2. Diversify internationally. Month 3. Build skills and community connections. Do not wait. The window is closing. Over the next 2 years, I will be tracking this reset in real time. If you want to preserve your wealth, you need to see this coming. It is the difference between preserving what you have and losing everything. Share this with everyone you know who has savings, retirement accounts, or who trusts the dollar. They need to know the 2027 reset is coming. The U.S. government is using Bitcoin and gold to erase $37 trillion in debt, and they are using your purchasing power to do it. Position yourself now, while there is still time. The choice is yours.